Hi, Lincoln. I am self-employed, and so I'd like to go through a couple of my options to be a tax striker or a tax resistor. I know a lot of people are talking about changing their W-4 so that they're not having taxes withheld, but I don't even get a W-4, so that's not an option for me.
Correct. So, yeah, when you're self-employed, if you're working for a corporation, you might get a W-9 form so that they have your basic information so they can report what they've paid to you, to the IRS, and to you at the end of the year. But nothing is withheld from your paycheck. So employees often have to adjust their W-4 because otherwise federal income taxes are automatically withheld. But as a self-employed person, normally you're expected to make quarterly payments of your income taxes. And so you already easily have the option of just lowering or eliminating that amount that you pay in during the year. And when April 15th rolls around next year, you can make the decision if you want to pay those federal income taxes or not.
One of the benefits for the kind of self-employed that I am is that I do have access to a pension. And so I can reduce my income significantly by putting money into a pension. But I realize not everybody has that. But everybody does have the option of an IRA or other kinds of retirement. And there's an annual limit, but it is a way to get a big chunk of money off of income tax right away every year or in the years you feel like you can afford to or want to. What are other good ways to reduce your income, especially if you're self-employed?
Yeah, if you're self-employed, yeah, in addition to putting money towards retirement, I mean, obviously, you probably are already doing this anyways, but keeping close track of those types of expenses they have to be legitimate business expenses that you could then lower your taxable income by taking those deductions. So, if you have to drive for your work, you could make sure you have two options. You have two options to either kind of take all the expenses of a vehicle if that vehicle's only used for business, but if you have a vehicle that's used for many things, you could still get a certain amount taken off for each time you drive. Um, that and then if you're buying books or you have a computer that you need for your job, you might have just thought, well, I bought this computer, and you might not be thinking I could have deducted that because if you I mean, I think according to the IRS, maybe you're supposed to only use it for business, but essentially, if you mostly are using it for business, because most people do personal stuff on their phone, you might also have a dedicated cell phone line for business work. So anytime you have something that looks like I'm using this for my business, there's a good chance you can deduct it from your income. And in years where you think your income might be higher as a contract worker, you could use those years as opportunities to kind of invest in your business and buy some items that you know you'll need in the future to keep your taxable income lower in those years.
Even in the years when I am able to keep my taxable income really low, I do always pay self-employment tax. Can you remind us what the difference is between income tax and self-employment?
Sure. So self-employment tax is essentially what the IRS calls Social Security and Medicare when you're self-employed. So if you're an employee, when you get your pay stub or W-2 at the end of the year, it'll show separately your federal income tax and then Social Security and Medicare. But when you're self-employed, on your 1040 tax forms at the end of the year, it'll just show up as self-employment tax. Part of that is because when you're self-employed, you're paying more into it. When you're an employee, your employer actually pays half your Social Security and half your Medicare. So when you're self-employed, you're paying double into it. And some people do have concerns when they make their quarterly payments that if they're just sending in Social Security and Medicare, it's still just a check or money order made out to the Treasury. Is it really getting to their Social Security? But we do know from decades of experience from other war tax resistors who have been self-employed that uh, it, the IRS does seem to have a heart in that respect. And even if the only money sent in is for Social Security and Medicare, they seem to divert it there first. Uh, and when those people then have got to the point where they retired, their reports did show that they paid into Social Security and Medicare those years. They qualified, even if they refused their federal income taxes, because you can have a federal income tax debt that doesn't disqualify you from qualifying for Social Security and Medicare.
That's encouraging to hear. Another question would be, I'm married and I'm the one that's making the money, and I'm wondering what impact it has on my spouse if I do or don't pay what I owe. Tell me about that.
Sure, that's another great question. There, oddly enough, there's a couple different items that could come into play. Uh, if you're in what's known as a community property state, most states are not community property states, but I'll quickly list them: Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, and Wisconsin. Those are the community property states. If you're in those states, and you're married, any income or debt that is accrued after you're married belongs to both spouses. So even if you file separately, the other spouse could be collected upon for your tax debt. But if you're in one of the other 41 states that are not community property states, if you decide to file separately, which I must admit usually isn't as advantageous tax-wise, usually end up owing more, but it is a way to protect the other spouse. The debt will not be attributed to them. And it's also allowed with war tax resistance couples, if one is not a war tax resistor or a low, does not owe anything because their income is lower, they could, if they're a homeowner or a car owner, even though the IRS hasn't been seizing things like homes and cars for many decades now, but that policy could change in the future. In anticipation that that could happen, you could file separately and put all the assets in the non-war tax resistance filing spouse's name, and they would be completely protected.
Thank you. That's very helpful. Um, I think I've learned everything I need to know. Is there any last wisdom you would offer to people in the self-employed category who are interested in tax resistance?
Just that self-employment does allow, a variety of options. I do know war tax resistors over the years that purposefully became carpenters or did essentially carpenters for households. They would just have small household clients, or I know another person who became who does massage therapy just with individual clients. And since they're not working for a corporation, that money does not get reported to the IRS. And they've decided, we didn't get into issues of filing or not filing. We have more resources on our website about how people might make that decision. But for those that don't want to file and are hoping to kind of fall through the cracks and not be noticed by the IRS,